Hello, everybody. Kirk Spano. It is Stocks of the Week and Retirement Income Options. I'm going to cover them both together this week rather than chopping it up, which is really the intent going forward. No video of me today because I got up at 5. I haven't showered. I've been working ever since, and I'm going to have an egg salad sandwich after this webinar and take a nap. Now, there's a lot going on with our stocks, so I'm going to go through them. And for folks who are new, this is going to be out to the public as kind of a tease to let you know some of the things that we're doing. And from here on out, if you want the more precise stock picks, if you want the more precise management, you will need to subscribe to an investment letter and at a minimum, the $1.99 YouTube channel, which is really just there to keep away the completely free riders. And I probably should charge a lot more for it, but because people pay me for the investment letter, I don't want to charge them a lot of money for it. All right, so where are we at? AMDX, we've already taken a look at the other day on Saturday, and it is about flat today after going up $2 a share. What would that be? About 60%, give or take, from the recent lows. I think that the news that they put out is really just the tip of the iceberg. Institutions have to digest a lot of information and they have to satisfy their investing charters for their funds. And I think it is imminent that we see some funds investing in AMETIS. We'll see the micro cap and small cap managers first, and then it's going to be off to the races with the Russell 2000 IWM because they now qualify. So as long as this market cap stays above 200 million, you are going to see AMETIS back onto the Russell 2000, which just leads to all sorts of good things. Now, we have talked about how these trading rooms and hedge funds beat up on the microcaps. And there is actually a paper put out, I want to say 2017, 18, 19. It was in there somewhere that talked about how these short attacks actually damage the financial structure of a lot of good small companies because it makes their cost of capital higher. AMETIS has successfully gotten through that period and now has a lot of capital coming cheap. Not only is there 200 million almost, so it would be 196 million in new EB5 money, but we're looking at pushing 200 million in net revenues from an India refinery IPO. That refinery, of course, is debt-free and expanding. If you've been paying attention to the news, India is cracking down on imported oil from Russia. So that just means that the demand for what AMETIS has over there, which is the largest biofuels refinery in the country, is just continuing to go through the roof. We also have over $50 million of investment tax credits coming to AMETIS this year, and probably about another $100 million next year. That should wipe out the preferred debt, as well as a big hunk of the just other unsecured debt and secured debt that AMETIS has. USDA, another $100 million looks like is coming by first quarter of next year in increments between now and then to fund the expansion of the renewable natural gas in the Central Valley of California, which is already hooked up by pipeline to the local gas company. There's hundreds of millions of dollars of capital coming to this company cheap. The EB5 money is at 3% over 20 years. The USDA money is at about 8% over 20 years, all stretched out, nice and long, easy to manage. But the tax credits start coming basically now. We already saw the first 60 million of tax credits hit. Another 50 million are coming this year. And next year, not only will they have investment tax credits, but they will have production tax credits. And then the LCFS credit from California will be higher. And then there's another IRA tax credit in there too. So what you are looking at, folks, is the development of an incredibly high margin refiner. And if I could find a chart, and I don't think it's going to be in here, but Western Refining was a company. Tesoro bought them. And then Marathon bought them. I know a lot of people like to talk about Marathon Petroleum and they really don't know anything about the company, but this is what the chart of Marathon Petroleum looks like. It wasn't too long ago, this was a $20 stock, but they bought Tesoro, which bought Western Refinery, and now look, a refining stock that in the space of 8 years, and really even since the COVID crash, has gone up tenfold. And it was a big company to begin with. Think about this. You are looking at a $200 million company right now that is about to add, what did we just add that up to? Over $600 million in new capital. At a minimum, it's a $1 billion company, I think, based on not even having that money, just based on the value of the refinery. Think about what is coming. They have over $4 billion of contracts for SAF. I forget the exact number. And then they also have a contract, roughly $1 billion for renewable natural gas and renewable diesel. They're hooked up with Petroleum, which is Love's trucking companies that you all know about. That's Petroleum is their energy company. So the interplay between the trucking and the airport in San Francisco, and they also have some offtake with Los Angeles planned. I can't see how this stock doesn't go up between 10 and 30-fold in the next 5, 6, 7 years. That's even if the macro is bad, because we're still going to need fuel. Sustainable aviation fuel is what everybody in the world is going to. Hundreds of billions of dollars are already moving in that direction. It can't be undone because, some politician decides he doesn't like it. Again, maybe you can slow it down, but it's like trying to stop Allen Iverson or Michael Jordan from scoring. Can't really be done. You can just slow them down a little bit. Nobody should be thinking of selling this stock until the market cap is at least $1 billion. At that point, you may have to address your asset allocation, but I can't see why anybody would sell this stock this year. It has grown, depending on the portfolio that it's in, between a 12 and 18% position after this last rally for me, and even I'm not selling any. I do intend to take what I can from my call options for April imminently in the next week or two. Right now, we're seeing some traders being traders in Ametis. Let them. You should be buying that stock right now on this little 10-cent dip because it might be the best you're going to get. The next announcement is going to be, and I've told you what all the next announcements are going to be, and I don't say what the next announcement is going to be if I'm not pretty sure, whether it's Ford or whether it's Spire Global, or pick any company, a Nutrien, pick a company where I said this is what's going to happen in the next month or two, where it did not happen. My little birdies are smart little birdies. My channel checks are legit and above board. I just ask for explanations of what is public. What does that really mean? They say this is what it really means. Oh, it's just like when I tell you that Bitcoin adoption is going on huge in the emerging markets. You're like, what? I don't understand sometimes. But here we got Bitcoin up 10% today. I actually posted my results in my shadow portfolio, my paper trading portfolio over at TipRanks. If any of you took a look at that, you can see it on Twitter X or X Twitter. X Twitter makes more sense, right? Top 1% portfolio, just based on the very short list. So the VSL, which I've been shadow paper trading alongside my regular accounts. My paper trading is much more aggressive than my regular accounts. Plus, it's unlimited money, right? I can add capital whenever I want. If you're not in love with the VSL right now and what we've been doing with it, with the target prices and the alerts for when something is dramatically undervalued and has big upside, man, you need to go look at the very short list and start understanding what that can do for you. So as we have stocks like Ametis, Spire Global, and others moving, we want to look for the other companies to be in. Last week, I told you that I think there's a bank that I want to be in heavily, not a starter position, not a half position. I'm already at a full position with puts sold to make it a double position. New York Community Bank Corp is about as close to a no-brainer as I've ever seen in bank stocks. After the financial crisis, and I know this seems like a long time ago, and it was, but I remember where I was that morning that everybody on CNBC hyperventilated, and I didn't really know what to buy. I was like, well, 9 months later, I was buying Freeport-McMoRan and tech stocks and some oil stock. And I had that 90% up here in 2009 because I was short going into the year, and I was long as heck coming out of it. You're going to see a little pullback here in the next 6 to 12 weeks. In the stock market, you're going to want to get very long. One of the stocks is New York Community Bank Corp. It's a growth stock at this point that, by the way, pays a 5% dividend. It might be closer to 6% at the moment. The capital that was added, the $1 billion plus, was more than enough for that company. The people behind the company have said that if it would need more capital because there was a bad macro event, they'll put it in. They have billions more. What I think they're going to use those billions of dollars for is to dramatically expand the footprint of New York Community Bank Corp and to make it as asset light as possible. So it's already getting to the point of being systematically important, and it's going to attach parts to fill in the gaps in the Midwest and other high growth areas, the Northeast and North Central, because of course they're already in the New York area, the Great Lakes region, California, and Florida, which means Texas is coming. New York Community Bank Corp could be the next U.S. bank. I would be shocked if it's not, to be honest with you. 1994, we had an interest rate event. U.S. Bank used that event to build a bigger bank. $2 bank, $50 bank. And it's been chopping around now that it's huge. This is the adoption curve. This is the curve that U.S. Bank is going to go through over the next 10, 20 years. And I think it's going to be faster because of what the Federal Reserve has to do with the U.S. Treasury market, which we've talked about repeatedly. Federal Reserve will have to support the U.S. Treasury market until a few years after the last baby boomer gets on Social Security and Medicare. At that point, you'll have some boomers already at 80, and some of that generation will start to die in the 2030s. So peak boomer expenses for retirement, 2030-ish, 2031, right in there. Last one gets on Medicare in 2029. In 2034, the last one can take maximum Social Security benefits. Let's say push that out a year or two. So in that 2029 to 2035 window is peak baby boomer expenses, and then the expenses start to come down. The thing is, as we see 3.5 million baby boomers leave the workforce, they get replaced by about half by immigrants, about half by youthful employees, Gen Z. But the millennials move into their peak earning years because they take all the really plum baby boomer jobs. A few of us Xers are already there, and a few more will get there, but we're a tiny generation. And what you are going to see is the Federal Reserve needing to do quantitative easing starting in the next couple of years into the middle 2030s. But about that time, the balance will become federal budget should get to balanced. Again, middle of the 2030s on peak millennial earning. The baby boomer generation is starting to shrink a little bit more quickly. And we will go through our Japanification instead of in 30 years, we'll get through the whole thing in 10. Well, during that period, we need a buyer of the U.S. Treasuries that funds the government with debt. You need big banks buy that debt. New York Community Bank Corp is going to become another one of those big banks. Fifth Third probably gets there, but they didn't have a stressful moment to give us a super cheap price to buy. And several other of the big regionals will go through some sort of acquisition process or merger process, M&A, and they'll become big too. The difference is New York Community Bank shares are between $3 and $4. New York Community Bank Corp shares are between $3 and $4 right now. I think it's a pretty easy rally to 15 to 20. Now, from 20 to 40 will be harder, and that will only be a double. But from 350 to, say, somewhere in the teens, that 4, 5, 600%, why wouldn't you want to be a part of it? Why would you wait until it's 15 or 20 to buy it? Which is what most people will do. And we'll just have to measure the FOMO at the time. And when we start selling people our shares in the 20s probably, or the 30s, and tell them that we're selling the shares, and I write an article that says we're selling the shares, and people tell me how stupid I am for selling those shares, I'll shrug my shoulders again and say, yeah, I was real dumb to be up 600% and sell you some. Take the opportunity, see the forest for the trees here on New York Community Bank Corp and on Ametis. These companies are going to become really big. Spire Global has had a big rally, and I did sell some of my shares last Monday, like right at the peak. And then it dropped on the secondary offering, so I bought the shares back. I have some covered calls that I had written for May that are $20 covered calls that are clearly going to expire. But even if the stock rallies to 20, they get called away, I'd be okay with that. It'll only be about a third of my position. So this ebb and flow trading with the covered calls that I pounded on you to sell for the last month, hopefully you're doing well with those. I would be selling the $3.50 or the $4 cash secured puts on New York Community Bank Corp for May, because between now and then is probably when we get angst in the stock market. Fed meeting is at the start of May, so you may have to buy back these puts right before that meeting is my guess, but we'll see. The Fed has implied, actually flat out said, inflation is not a big deal. We want to make sure we protect the employment market, which is a thesis that I have covered a lot in the past. I haven't talked about it much lately, but employment is much more important than inflation, because we know that the big secular trend is actually deflation, not inflation. Inflation is just somebody that showed up to party for a few hours. Deflation because of aging demographics and the long-term impact of technology, which during CapEx cycles can look like inflation temporarily, but then the price of everything comes down because the technology gets applied. So technology is disinflationary long-term and secularly, with moments of inflation during the CapEx spend. So think about how these cycles are playing out and how they have all fit into what we've been talking about for 4 years now, over 4 years, since CES 2020. When I told you sell almost everything because COVID is important, but technology was going to be a big deal in how it applied to industry and banking and healthcare. AI was coming, self-driving cars weren't, right? That was one of the messages I had. It said self-driving cars, we ain't going to get them until the 2030s. No. Elon says next year. Elon was wrong. Go take some ketamine. You lose. Remember when I said that Elon Musk was going to lose half of his net worth? Said that about 2.5, 3 years ago. There's a video on it. He did. I mean, he's still rich. Now suddenly the pessimism on Tesla is picking up. I'm telling you, I'm looking for a spot to buy it. I think it's lower from here, but not much. Another 100 million maybe, right? 100 million here, 100 million there. Eventually you're talking about big money. Actually, I take that back. 100 billion here, 100 billion there. And then you're talking about big money. Last thing I want to talk about today are the streaming stocks, right? Streamer deals coming through. Warner Brothers Discovery turned out to be a shit stock, down about 40-50% on that one. Do I sell it right now? No. Do I buy it right now? Maybe if I want to average down on the expectation that they get a deal done. But I'm not actually buying more Warner Brothers Discovery because I've got a hunk. I'm just waiting for the deal so I can exit the stock. I think that deal is coming soon. Because of their merger with Discovery, they weren't allowed to go through any other M&A until April of this year. April of this year is in 6 days. To me, it makes sense that Comcast buys them. We'll see if they do. But Zasloff and the board there have been more interested in how much they can suck out of the company than anything else. So as they have cut debt, which they've done a good job of, they have fed themselves like pigs at a trough. The executives at Warner Brothers Discovery are thieves, and they're good at it because they hide it. Roberts over at Comcast is a smarter dude. He took his time getting into streaming, built out the rest of the company. He's got the technology. He's got that paycheck from Disney for Hulu. Meanwhile, Disney is busy with an activist investor, Peltz, who is half right and half wrong. So maybe Disney can figure out the half they're right on and the half that Peltz is right on, and Disney becomes a big deal. Disney really should sell a handful of assets. I actually think they should sell ESPN, but keep a contract with them for Hulu. And Disney should end up putting out what looks like a cable package on the Hulu infrastructure, kind of like Sling and YouTube have, and sell a bunch of the other assets, just keep contracts, capitalize them, kind of like lease back. We'll see. Fold ABC Sports into ESPN. I mean, there are some brands out there that you like, but there really is just too much content, too many moving parts. Television has become difficult. They have to make it easier for the consumer, and they need to cut back on the nickel and diming. We need to get back to a single-digit number of big providers instead of dozens. Major sports leagues won't like that, but I think there's a big correction coming in there anyway. I think major sports have a big headache coming, right? We're at peak sports right now. Future generations are smaller. Who's going to pay all the Ohtani contracts of the world? I think the Dodgers have a big problem when they have to pay that. I don't see perpetual growth in sports anymore, and I'm a sports guy. I think Warner Brothers Discovery gets acquired or merged. We'll see how that looks after the fact, but I think it's probably a selling opportunity when it happens. Paramount is clearly for sale at this point. They sold off a little bit of their India assets, or actually their share of some India assets. They should be bought or merged. I really think Warner Brothers Discovery makes sense as part of Comcast. You can fold Peacock in there, turn Max into a Hulu-like subscription. They should bring back the HBO name. That could be their arms dealer, selling content. There are some very rational ways to fix this industry. There's some really greedy sons of bitches sucking money out of it right now with big egos, self-righteous, Did you watch Succession? I mean, the entitlement of some of these people is off the chart. I think Disney can be a big winner just because it's Disney, but they also have to get leaner and take part in the rationalization of the industry. Some good old collusion would go a long way in entertainment. And I think that starting in April, you're going to start to see some of that collusion come to fruition. Comcast is the one that I want to own. They are the most financially secure after Netflix, but they're cheap and pay a dividend. Versus Netflix, which is expensive and doesn't pay a dividend. Netflix has been rumored to be interested in Paramount. That would probably be a good deal for them. They get Star Trek, which is a big deal. It's as valuable as Star Wars was. So we'll see. One more thing, actually. IIPR, Innovative Industrial Property. Told you to load up on that when it was in the 80. Crossed 100 the other day. What, 4 months later? It was 104 now. Up about 25%, and it's still paying a 6.9% yield. We might get to a point with IIPR, and I have a hard time hamstringing myself on this one. So we bought it right here in the trough. Anybody who ignores technical indicators, or at least, or doesn't respect the technical indicators, again, you shouldn't be managing your own money. Technical indicators are important because they give you a clue about the fundamentals, kind of like a wake-up call. Now, you can trade the technicals day to day, like some people do, or you can use the longer-term trends on the weekly and monthly charts to let you know what's really happening with the money. So IIPR still has a ways to go on the monthly chart for the relative strength index. At some point this year, I think, or early next year, we'll probably want to sell some cover calls or take some profits. But this price range here, this box, fair value gap, we're probably looking at a price in the middle 100s the next year or so. And that's really our bogey here in the next year or so. So don't get carried away just because it started to rebound, right? Even the corrections on the Elliott waves don't look particularly severe. Stock could get all the way up to 200-ish, but I think that this target makes more sense. See, 160. When I switch back to the weekly chart from the monthly, right, you get a little zigzag here up to the middle 100. I just wanted to give you an update on that because somebody asked. Any questions before I go and have my egg salad sandwich and a nap? Going once, going twice, type faster. Nobody? Bueller. Permian Resources, which we are buying under 10. Looks like it still has a long way to go to the upside. I think that's going to get into the middle 20s. Then we'll have to figure it out from there. So, Janet, so the words you're using are a little confusing to me. Any put ideas to buy on AMTX? I wouldn't buy a put on AMTX. You need to understand the language if you're going to use it. Would I sell puts on AMTX? Maybe. But I think at this point, you just want to be in there because the next move up in AMTX could be pretty explosive. So I don't think selling puts on AMTX makes a lot of sense right now. Not unless you're selling deeply in the money puts. So if you wanted to sell puts on AMTX, you'd actually sell in the money, probably for July, probably $7.50. You get $3.12 for them, which nets you a price of $4.38, right? Say $4.50. Right now, the stock's at about $5.50 because you want these shares put, or at least you want to capture a lot more upside. My opinion, just buy the stock. Just buy the stock. You were getting a little trader pullback today. Buy the stock. Oh, let's see here. ASTS. They have that shareholder meeting announcement coming up. It's almost certain to be a launch date, right? Because they if it was bad news, they would have told you. They would have had to. So that means it's good news. That means that you're going to have a launch date. So they're going to announce when they're going to launch. It'll be sometime this year. They're going to get those 5 satellites in orbit, and they're going to start making a little bit of revenue from AT&T and a couple other companies, right? We know the technology works. We know they are getting major partners, telecoms all over the world. This is one that is just crunched down so much. Again, you shouldn't bother with options at this point. Well, I take that back. There is an option, and I actually am going to think about it between now and next week. We may have to talk about it by the end of the week. So the target's way up here. The option that you would buy if you're aggressive is actually a call, probably $5, guess. So you can get $5 calls to August for a quarter on AST Space Mobile. So if you are a bull on AST Space Mobile and expecting that their announcement next week will be good, I would buy the August $5 call for a quarter and then hope that there's FOMO between now and then. Otherwise, just buy shares and get to your asset allocation that you want. But it's almost certainly good news next week to have something to do with the launch. Because that window was supposed to be Q1 or Q2, and it's interesting to me that they're doing it on April Fool's Day. So hopefully it's a really funny, good, make a bunch of money joke. All right, let me go through the list here. I don't know why anybody hasn't bought a whole bunch of Bitcoin yet. Buy now. If it dips, buy more. If it dips, buy more. Pretty simple. Stop waiting to buy good stuff. You know, you got that little pullback last week. Shooter was absolutely right. You should just bought some. But at this point, you know, it's too bad there's no puts to sell on it. There will be eventually, but it's a great holding, and you should just be scaling in. I mean, we've been having this conversation for a year and a half. So Shooter and I both had the same target price for this year on Bitcoin between 85 and 115,000, basically a band around 100 grand. But if it breaks through that, you can get to 150, 160 pretty quick, and then after a little pullback, get 300 pretty quick. The adoption of Bitcoin is massive, quite potentially a 50 bagger. I was talking to one of the firemen who bought Bitcoin 4 or 5 years ago at the fantasy baseball draft on Saturday, and it was the first time he actually opened up about what he thought. He's a pretty smart guy. He buys some of the hype about hard money and stuff. Doesn't really understand the geopolitics of it all, but he understood that it can replace dozens of other currencies in the international currency basket. He's gonna retire rich because he's holding some Bitcoins. God bless him. Save lives for 20 years and then retire rich. And he's cute. Yeah, so his wife's got that going for her. All right. Did I miss any? No, I think that's it. All right, folks, have a good day. And the reason I'm having egg salad today is because tomorrow we are taking some hard-boiled eggs over to the grandkids' house, and we are going to color eggs for Easter. So do something fun this week. All right, take care. I've got a couple articles coming out after my nap.